Hello everyone, I'm Sahil and welcome back to the channel. If you guys have been following me, you all know that I'm heavily invested into the Chinese stock market. And if you have been following me, then I think you are invested into Chinese market as well. So since we are coming to the end of this bloody week, I wanted to just cover everything what has happened and I wanted to share my opinion on what's been going on. So let's hit it up. Alright guys, before we start, just a small plug-in. I've started a new Discord channel for our small community over here. It's linked in the description below, completely free, so come on and join in. The reason I'm doing so is because I truly believe that knowledge is worth so much more when shared and debated upon. And the same thing I saw in my prior video on Ping An, where in the discussion, in the comment box, the discussion was so good and so many of my viewers and subscribers brought in such valuable information that I truly appreciate. But I think Discord would be a better place to do these discussion and it would be more valuable for the entire community. At the same time, next month, right, I'm starting my uni in August itself. So I don't think I would have any time to make these videos other than a monthly financial update video, which I'm committed to do for you guys. So yeah, and also at the same time, right, I feel that I will be able to offer more value in both of these channels because there is so much information, small information that I can't be bothered to make a video for, but I can share it out there. And I also can, on the spot tell you guys on my buys and sell whenever I place the order and I fulfill the order. So yeah, it will be a great platform. But once you join, I would request you guys to just introduce yourself. I don't require any personal information, just like your small bit of the background so we can try to understand where you are coming from. And that will just make this small community way stronger. We are small in numbers, right? Not everybody's bull in China. So yeah, that being said, let's get into the topic of the day, and which is the entire bloodshed that is going on in the Chinese market, right? So the entire bloodshed can actually be attributed to just one thing, which is the fear of the Chinese government. Some are saying that the Chinese government has just started to show their true face. But is it really so? Is it something that we as a foreign investor should really fear from, like the Chinese government? Well, in this video, we're going to figure out just that. Starting with the entire regulatory saga, the regulatory clampdowns from the past 1 year. So all these regulatory clampdowns, right, can actually be split up into three different parts. So firstly, we saw the fintech regulations and financial. Secondly, we saw the monopolistic behavior regulations with Alibaba and Tencent. And lastly, we saw the data protection regulations from Didi. So, these, if we bundle them together, right, with these headings, we'll see that this is nothing new. Every other developed world has these regulations. Like looking at US, right? Every other day, there is a CEO of a big companies, Facebook, Apple, Microsoft. They are sitting in front of the Senate or the Congress, I don't know who, testifying for something like monopolistic behavior or something else, data protection and all those things, right? So it's completely nothing new, right? But the only thing that China did it differently is they implemented it in a matter of 2 years. And that was really fast. From making it a law to setting up bodies and enforcing it, that is very fast for any other place to comprehend, right? But I want to ask you guys, what else were you expecting from China, right? This is exactly what we invested in China for, like their ability to do things fast. They went from a backward country to a world power in a matter of 2 decades. So that was what inspired us to invest into China, right? The ability to make decision and implement that just like that, So if they're doing that, why are you fearing that, It's all good, if you ask me. And regulations are not something that is going to harm the companies, right? Like if you see any other countries, they have these regulations, but what happened? The companies go and adjust to these regulations and move on. It's not going to destroy the companies, and Chinese government themselves are not going to harm their own industries, own companies. The entire thing they want is for the companies to create more value instead of fighting. Like they should fight it with each other, but instead of showing monopolistic behavior and doing pricing and all those things to harm it's not in the public's favor, right? It's much better if they create new value to the country. So that settles the monopolistic behavior segment. Then we have the fintech. On the fintech side, right, what Ant Financial was doing was really bad in the long term. So they were taking money, they were taking data and selling it off to the various financial institutes for the matter of providing small loans, and that would just has a tendency to inflate into a bubble. Like, if loan are so easily, the credit is so easily available from a data which cannot be verified in a way that, with WeChat and Alibaba, there's a whole set of problems over there, and it would have become a bubble, a financial bubble, with the debt already so heavy. Like in China, corporate debt is so huge, and they don't want that to flow down to the public as well. Hence, they came on with the regulations, right? Thirdly, the data security regulation is just to protect their own interests from US. So US has already, threatened China that if the companies do not let the US authorities to audit their financial reports, then they're going to delist the companies, right? But China doesn't want their data to leak out, just like how US wasn't expecting TikTok, and I believe they are still not accepting TikTok because they're worried about the data. It's completely obvious that China will do so as well, right? So they're restricting the data flow from their country. So that is another issue. So if you see all this thing, right, it's completely valid with what they are doing. And then we move on to the second point, which is like the deleveraging of the real estate, and also the what they are trying to do with the education tech. So firstly, I want to address the education tech side, right? That is like, first of all, you should understand that the only thing they have officially done is to ban tuitions on weekends and on holidays. The non-profit thing is not at all official yet. It's just rumors, and I don't know where they would go. And I would openly say that if they go and implement that, make these companies non-profit, that is very, very bad. Like, I would be offended by that as well. I think they should rather take these companies private first, and they should have already done it before like these news coming out. I've mentioned it in another video. So they should take it private and do whatever they want, instead of making all the investors lose out their money. So that would be very stupid. But then again, that is not official. And the reason why they did the weekend and the holiday ban is just to improve the mental health in their country. Mental problems, like mental health issues, are a big problem in China and any other Southeast Asian country. So they are just trying to see what is the problems being faced by the rest of the world, and they're trying to address it in their country before it becomes too big. They are already seeing that people are not enjoying. There was a book written by Chairman Xi, and he clearly mentioned in that, and that is coming out into public right now, where he clearly mentioned that it's becoming very toxic to have these tuition centers running for profit and all those things, right? So whatever they're trying to do is in favor of the public, and in the long run, right, this is just going to be beneficial. If you take out the weekends, or if you take out the holidays from the tuition side, it's not going to harm them very much, right? In the end, everything is going to optimize, and then you'll have the same value. The value would be there, and the same earnings, because right now, if the tuition center earns too much, there will be another tuition center, and they will compete, and the prices will go down, right? And at the same time, if the companies are not able to stay afloat, but there is still demand, the prices will go up for whatever time they are allowed to operate. So the prices are going to optimize, the earnings for the companies are going to optimize. So I don't fear anything in the long run. In the short run, a sudden move will definitely affect them, but in the long run, it doesn't matter. And on the other side, the public health issue will be certainly addressed. So yeah, that is one thing. And then we talk about the deleveraging of real estate, right? Yet again, corporate debt, and especially in the real estate development side, right, is huge right now. So China is trying to do a slow deleveraging, right? If you look into Ray Dalio, right, he will describe it as a beautiful deleveraging, which is the best thing that could happen instead of a bubble pop like what happened in 2007 in US. Which one would you rather prefer? So I would prefer the beautiful deleveraging, right, where slowly some companies fail, but then the better companies come up, and market takes its space. So that is what I would favor, in my opinion. And I think everybody else who has a longer time horizon and longer view span, they will prefer as well. But if you're thinking short term, then be it. And also, I want to summarize this point to this topic, that the Chinese government themselves look at a longer time frame. They want their country to prosper in the next 10 years instead of like the other countries out there and the other governments who only think about their term, which is like 4 or 5 years. Like talking about US, right? They came up with all the stimmy checks, and they took out so much debt to the point that Yellen recently mentioned that US is hitting their debt limit, and they would have to actually exceed the debt limit, or if not, they would have to not take any more treasury, and that would mean that the US government will default. Can you comprehend that? US government will default, and that in any other country would be tragic, but in US it's completely normal because they can just increase their debt limit. They have already done it 3 times in the last decade, and is it good for the country or the currency? Not at all. They are going towards a doom, but they're just delaying it and delaying it and delaying. So that is never good, right? And that shows you how they're just thinking about the short term. They would make people happy for now, but then in the end, everybody's gonna suffer. Whereas in China, they're looking for the next 100 years. So they're gonna implement things that is gonna improve the country, may bring the country to prosperity, may bring the public to the prosperity, and in turn, the companies will benefit from them, right? So summarizing these 2 points, right? I wanna tell you, right, if you don't understand the Chinese government, nobody does, but you have to just basically understand that what Chinese government wants. They want prosperity, right, for their country, and that is completely normal. And you should only invest in the country if you understand this, and you have a longer time span. So for me as an investor, I appreciate this thing, and that was the very basic reason I invested into China. If you go back, I think last year or so, when I made a video on this topic, right, why am I investing into China, I have told you guys this, that the government plays a big role in my decision on why I invested into China. And yet again, they went from a backward nation to a world power in 20 years. And that was solely because of their decision making, their implementation, and the whole entire thing, right? For some people, it's like authoritarian, or am I pronouncing it right? My English sucks, so whatever. But they could be that. But at the same time, if they're using that power for the good, right, then why not? That is just a best way. In Singapore, we had similar kind of thing, and that's how Singapore became so good in such a short time span. And China is being able to implement that at a larger scale, which is just amazing. So that is the basic thing. If you still don't understand, go watch my prior video on China, that first video that I made, and I put in a lot of efforts into that video. So go and check that out before you even start investing in China. You have to really, really understand these topics. And now moving on to the real bloodshed, right, in the past week. So I want to cover that by saying that, obviously everybody's selling because everybody fears. Most of the selling, I believe, is coming from the Western side, US basically, because obviously, it's not just because of the retail investors, but also institutional investors that are fearing the delisting of these Chinese tech companies, and also they're looking at their risk. And sometimes it is the public that is forcing this liquidation from the big ETFs, like talking about Cathy Wood's ETF, right? She's just selling Chinese stocks like crazy, even though at a loss. She's taking a huge loss selling these Chinese companies. She was buying when everything was hyped up in December to February time, right? She was loading up on Baidu, JD, Ping An Healthcare, and all these companies. But now she's selling it off at a loss. But that is completely stupid. I'm not sure she is to blame for it. She's making the call, or is it she's forced to do so because of the redemptions from her ETF? I can't give you an answer to that. But if she's taking these calls, right, then I would call her, I don't know what to call her, because she's way more accomplished than I am. But I really feel that the only thing good she did is Tesla. The Bitcoin call was crap. That was just something hyped up and she went into it. And I think she's just getting into all the hype stocks. She's selling all these Chinese stocks and getting into all the shitty hype stocks of US, which is, damn, I now I'm waiting for her to sell out more and more and completely exit from the positions that I have before I add in more of my money into these companies, because I really fear how she's playing the game. Like, selling high and buying high and selling low is what she's doing this entire year. So yeah, leaving that to aside, I believe, like, all institutional players themselves are feared about the delisting of these Chinese companies, and moreover, they fear like US banning investments into these companies. So yeah, that is maybe one fear. And then also China, in the past, whatever decisions they have made, they fear that they are not going to allow these companies to list in the US exchanges. But China has made it clear in a phone call to all these big institutional investors that they're not going to do this. They are only there to regulate that everything is done in a proper procedure. So yeah, that being addressed, right, one of the biggest takeaways you should take is that fundamentally Chinese companies are very strong, stronger than they have ever been. They are growing so fast. They have least leverages you can find. All these tech companies, they have sometimes zero leverage. So yeah, they are fundamentally very, very strong, with strong growth, strong momentum. Everything is good about them. There's not a single stock you could find where things are going bad, or whatever the thing might be. The country itself is very strong. Economically, they were the first big economy to actually recover from the pandemic. They were able to manage the pandemic well. So I don't see any other country around in the world who is performing so good, and the companies have such good potential, but their stock price is so down. And when the valuation is crazy low and fundamentally the companies are strong, what does that call for? That is the perfect buying opportunity, in my opinion. So I'm really, really excited about these times. Last year, I was excited to get into value stocks. When the pandemic happened, the banks dropped, and every of these, the water stock and everything dropped, right? I was very happy to pour in my money, whatever I had like 20, 30K. I poured it into all these value stocks, natural gas, all this construction company, and all these companies, right? I just poured in my money. And now I'm making like close to over 50% gain on each of those investments I made. And now this is my time to invest into tech stocks. So yeah, I'm taking this opportunity. Now I'm crazily invested into Baidu. I'm getting into JD as soon as possible. I'm into Ping An Healthcare, Ping An themselves, and many more to come. So for me, this is crazy buying opportunity that I have. All right, in the end, I believe, like, if you guys are already invested into Chinese stock, or if you plan to invest into Chinese stocks, take a step back and look at the bigger picture. Look at the longer term, because that is how the Chinese government looks into and is trying to shape their country according to. So if your companies, whatever you're investing into, and your investment thesis is in line with the government's view of the future, then you're all set. So yeah, that is what you should do, and that should be one of your due diligence going into these Chinese stocks. And I guess that's about it for today. Thanks. Bye-bye.